Hello and welcome to this Forex Preview at xm.com. I'm Maria Bashardis, and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing upcoming U.S. jobs data and the potential reaction in the dollar. So Rafi, in April, the U.S. economy added only 266,000 jobs, which was far below expectations. The Nonfarm Payrolls report for May is due out on Friday, and there's quite a bit of uncertainty about what to expect, as it seems to be getting more difficult to get an accurate reading of labor market conditions.
That is right, Maria. So it has been difficult to predict the NFP numbers lately, and markets were really shocked by that April figure, which was far below expectations, and that was one of the biggest misses for the NFP in history. Now, the latest forecast suggests that we should expect a gain of around 664,000 jobs for May, but even still, there's quite a bit of uncertainty around what we're going to get, and that's mainly down to the fact that the recovery has been uneven in the US, like in most other countries. So some sectors are doing really well, other sectors are still struggling. So it's difficult to get a view of the overall picture, get an overall view of the economy. And on top of that, we did have from the March stimulus package very generous unemployment benefits being included in that stimulus package. Now those benefits will last till September, and they're weekly payments. And many people suspect that this is deterring people from going out and finding work, because especially for low-income earners, what they would get through the benefits would be much higher than what they would get were they able to rejoin the labor force. Now, several states in the U.S. have now stopped these payments, so they've cancelled the payments before their expiry date, because they did cite this as being the main reason why the April's number was so long. So there's a good chance that we will get a decent bounce in May, but of course still a lot of uncertainty as to what's actually happening in the labor market right now.
Okay, so what market reaction can we expect if we end up getting another big surprise? And what about the Fed's next steps? Are discussions about tapering QE around the corner?
So the recent reaction to the data we've had, which we've had some very strong data, but at the same time, although it's strong, it's not also, neither is the data pointing to an overheating economy. The April jobs report was an example of that. And we've also had some Fed comments suggesting that tapering discussions could begin soon. But nevertheless, there is no sense of panic in the markets right now. This could be because perhaps investors don't think that, or investors believe that the Fed, if it does begin to taper, it will do so very gradually. So there's going to be, the Fed will be supporting the economy for a very long time, even after tapering has started. Or perhaps because the Fed has been so dovish lately that the investors are just not trying to second guess the Fed, and they're just waiting for a clear signal before they react. On the whole, though, the jobs data is not expected to change the near-term outlook for the US economy, nor for the labor market, unless we get a very big surprise. So if we were to get a very huge upside surprise, we could see yields jump, but whether or not they will jump high enough to break above that recent range it's been stuck in, that's a different matter. That may not happen until we get the clear clear sign from the Fed. So we might see a short-term boost to the dollar, but on the whole, we're probably going to have to wait a few more months to see a clear trend reversal in the dollar.
Rafi, thanks so much. And thanks for joining us at xm.com.